The Organization of the Petroleum Exporting Countries, OPEC Plus, has agreed to increase its oil production by approximately 411,000 barrels per day in July. This decision marks a continuation of the group's efforts to gradually unwind its production cuts, which were implemented earlier due to market volatility and global economic concerns. Details of the agreement. New production benchmark. OPEC Plus has decided to use its 2025 oil production levels as the benchmark for 2027. This move aims to align the group's collective output with market demands and ensure a more stable oil market. Output increase. The planned output hike of 411,000 barrels per day in July mirrors the increases seen in May and June, further accelerating the unwinding of production cuts. Market impact. The decision has led to a decline in crude futures prices, with the market reacting to the news of increased supply Y². Implications of the decision. The OPEC agreement has significant implications for the global oil market. Some key points to consider are: supply and demand balance. The increase in production aims to balance the global oil supply and demand, potentially stabilizing prices in the long run. Market volatility. However, the reaction of crude futures prices indicates that market participants are cautious about the potential impact of increased supply on prices. Global economic factors. The decision also takes into account global economic factors, including the recovery of oil demand and the overall economic outlook. Conclusion. The OPEC Plus decision to increase oil production reflects the group's efforts to adapt to changing market conditions and ensure stability in the global oil market. As the market continues to evolve, it will be essential to monitor the impact of this decision on oil prices and the broader energy landscape.